Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Atmir with the Bulletin Board Heroes on Wednesday, the 19th of February here on Share Talk, and sponsored by the UK Investor Show. That's held on Saturday, the 25th of April. Starting off with Big Dish, which has rallied again after the announcement of a director share purchase. Second gap in less than a week. The first gap was through the 200-day moving average, currently at 3.36 pence, and the latest one really through, I suppose, that old September resistance zone as well. So the point to note today, in addition to the gap, is the way that the 200-day line is now rising as well, and that means that we are technically in the run-up to a golden cross buy signal. The run-up to that is normally the strongest part in the technical cycle. So we'll see whether Big Dish can deliver on that historic type of situation. Target there, the top of the July trend channel at 7 pence, at least while we remain above the area of the gap at 4.23 pence. Going on to Eris, which is a stock which I cover occasionally. That's looking a bit more interesting at the moment from the bull perspective. The reason for saying that is basically the near-term break of this symmetrical triangle that we've had in place on the daily charts in September. End of day close probably above 6 pence should be enough to get things going and prove that this is not just a sort of temporary bull trap. And above 6 pence, really looking for 12 pence, which would be the top of a rising trend channel from the end of 2018. Stop loss on the whole thing, probably back below that uptrend line there from December, and the 50-day moving average area around 4.5 pence. On to ECR Minerals, which finally looks like it's coming good after a long time in the wilderness. Nice solid candle again today above the 200-day moving average at 0.81 pence. Looking for a top of May trend channel target as high as 1.3, which obviously retests the resistance that we had at the end of that month, in fact, the beginning of June as well. Looking back at the way that the charts panned out over recent years, you can see obviously there is a lot of potential upside there if we can just clear this 1.2, 1.3 resistance on the stock. Going on to Oracle Power, which has persistently had enthusiasm from the Twitterati over recent days and weeks, even though the stock came back down from 1.8 pence to 0.6 pence, basically a two-thirds decline. Today we've got the shares breaking the key charting trigger, which was a line of resistance from December at 0.8, also above the 50-day moving average at 0.94, and really while we're above the 50-day line, which is rising, which is a more bullish, the more bullish setup there, a retest of 1.8 seems to be the minimum on offer for the stock. In fact, if one is a bull or an optimist, let's say, of the shares, you could actually target as high as the 2.2 pence area as the big target here over the next month, while we remain above the 50-day moving average. On to Sarabi, which is less dynamic situation, I would say, but still one worth taking a look at. Here we've had the triangle break for the shares in January. Stock heading higher via a rising trend channel, which has been in place since June last year, and really while we're above the 80 pence area, which is the initial February support, looking for 125 or so at the top of that channel. Confidence boosted, by the way, the 50 and 200-day moving averages both rising in parallel, something that you tend to see in the the strongest of uptrend situations. On to a stock which was flagged here quite near the lows, I think around somewhere around the 20 pence zone in December. Certainly there was a line break of the stock in early January, which was triggered there, so that's around the 23, 24 pence area. And since then we've progressed very, very well indeed. Very encouraged by the unfilled gaps to the upside. So we've had several of those now, and looks as though, given this kind of ultra strong price action, to target 70 pence at the top of rising December trend channel while we hold above 40 pence at the floor. Seems to be very much in order, even though we've come up a long way. Surprising, actually, that there's not as much talk about the stock, given how strong the price action is at the moment. Stock which has been, let's say, slightly frustrating in the recent past is Extract Resources. They had that spike in July through 2 pence, and really since then it's been a consolidation. Slightly reminiscent of the consolidation we saw on Oracle Power, but today we've seen a very long and very solid green candle there for the stock, so breaking the 50-day, breaking that resistance line from September. And really all that's left as far as giving the bulls the trigger on a potential fresh rally is a clearance of the 200-day moving average at 1.05 pence. Above that, and at least while we're above the 50-day line today, we can start looking towards the top of this broadening triangle at 1.8 pence, that one which has been in place since July. At this stage, really, we're not expecting the stock to go back below or hold back below 0.9 for any period of time. So 1.8 the target for Extract. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.